Welcome back, everyone, to our YouTube channel at Sahara Equity. This is Jas, Kaur, one of the partners. And today I have Kavitha Baratakke from Cherry Street Investments joining us. Let me briefly give introduction of Kavitha Baratakke. She is the founder of Cherry Street Investments and an Austin-based passive income coach and syndicator. I'm sure many of my friends and families has known her very well because she's also partnered with us in multiple deals. And I can tell that she does vet out her deals very, very thoroughly. She hosts regular webinars with expert guest speakers on investing, tax strategies, asset protection, 1031 exchanges, success mindset, and more. So I would definitely want her to talk about her experience in this journey, and let me just take it from here. So Kavitha, how did you get started with the OZ fund here?
Yeah, I'm excited to talk about this topic today because in 2018, I personally had some huge capital gains event. And that's when I started researching OZ funds because the regulation itself was passed April 2018. So it was very new when I had my tax capital gains event from stock sales. So I was talking to my CPA and she said, I don't know any way you can avoid paying gains on stock sales. And that's when I started researching. I found OZ and I got to doing so much research that I started putting a lot of content together for my investors to understand how to use OZ funds. And that was kind of my journey. And today I'm here to talk about OZ funds and how investors can use that to invest their capital gains from other sources, whether it's stocks, cryptos, whatever.
That's great. So let's get into this basic question series. We'd call it Investing in OZ Fund 101. So let me just get started with asking you, what exactly is an OZ fund?
Okay, so let's start with what is an OZ, right? 2018, when this whole concept was introduced, the idea of an OZ is very, very simple. There were designated opportunity zones throughout the country where they were identified as areas that needed capital influx. From an economic standpoint, you want to develop and push more investor capital into these areas. So Fed came up with this idea of OZs where they wanted to see more influx into these areas from investors. So they associated some tax benefits for investing into these areas. And so there would be more capital. That's how the idea of OZ came up. So essentially, if you go and look at OZ maps, so every state has OZ areas or opportunity zone areas, and investing into these opportunity zone areas is done through an OZ fund. Now, to be a qualified opportunity zone fund, you can't just go buy a property in this area and qualify it and get all the tax benefits. You have to have some special treatment, like doubling of the cost basis, holding the fund for a minimum period of time. So there's a lot more to a qualified opportunity zone fund than just buying land or buying an investment in this area, but it kind of stops there. So that's the idea of an opportunity fund. And what kind of things can go into an OZ fund, we'll talk a little bit later, I suppose.
Yeah, I was going to ask that because I did want to ask first, why would anyone want to invest in an OZ fund?
So essentially, you can think about it this way. When you have a capital gains, let's say you sold a bunch of stock or you sold crypto. Now, normally when you have a taxable event, which is a capital gains event, whether that's short-term or long-term in that case, there is no recourse for you but to pay taxes on that. So let's say you had a short-term capital gains event, you bought stock, sold it within 6 months or a year or less than a year. Now you are due on that, you have to pay the taxes of whatever your ordinary income tax rate is. If it's long-term, maybe it's 15 to 20%. Again, depends on your income and which state you are and all of that stuff. So the idea of OZ is very simple. You take the capital gains from any investment that you have executed, like you sold, and then invest that capital, only the gains, into this OZ fund. And then you get a special tax treatment for that investment. One of which involves that you get to defer paying those taxes until December 2026. which means your taxes are really due in December, by April 2027, right? The other biggest advantage that is there in OZ fund is that, let's say you invest $100,000 in an OZ fund, and now that OZ fund became $200,000 in a 10-year period. Now that $200,000 in gains. So let's say 100 became 300. You have a $300,000 growth in the fund. That 200 in growth is tax free. Yeah, that's the biggest impact of an OZ fund, is that all the growth in the fund is tax free.
Yeah.
When the OZ program first started, there was something called a step up in basis. So 2018, when the program first started, for a 7-year period, if you held, right, you would get a 15% step up in basis. If you held it for a 5-year period, you would get a 10% step up in basis. Now, what does that mean? Let's say you had a stock sale again. Let's get back to that. And that stock sale was 200,000, right? Total. Let's say you sold stock and it netted you 200,000. Off that, let's assume that you bought that stock for 100,000. That's your cost basis. Now you made another $100,000. That's your capital gains, right? That's your actual gains. Now, what a step up in basis is very simple. You take that 100,000 and you step it up by 10% or 15%, depending on that 5-year or 7-year period. So that's how it started. So initially you could get a 5% step up for the 5 years, and then 15% step up for 7 years. So let's say you had $100,000 cost basis. Your step up in basis now brings it to $115,000. Now, what has happened to your gain? It has shrunk from 100,000 to 85,000 because your basis went up 15,000. So when the program first started, that was an opportunity for you to not only defer taxes till December 2026, but also get to step up your basis by a certain amount. Now the program has been running for a while, and the advantages of the step up in basis are going away. But I think the way investors need to look at this is the biggest advantage is the tax-free growth in the fund. Where else do you park money that you get tax-free benefits? Nothing else that I can see. So that's really the catch, or that's the biggest opportunity. The second opportunity here is that you do get to invest, you do get to save taxes or defer taxes on that gains right now. So let me give you an example. The same $100,000 gains, let's say you park it into a regular fund, right? You will pay taxes on that $100,000 today. And let's assume your tax rate is 30% and you pay $30,000 in taxes. You net have only $70,000 to go invest into any investment. So think about the amount of capital you go put there is already reduced. So your growth is now lower, right? Even if you were going to make the same dollar return on investment, you're now working with a smaller capital. Here, you get the entire $100,000 to go invest, and you have till December 2026 to pay taxes on it. So it really buys you the time value of money until December 2026 right now, in addition to the tax-free concept or tax-free nature of the Opportunity Zone Fund.
We definitely need to go into detail about this with some examples, maybe. But let's move on to my next question. Very simple. How long, does after realizing gains, you just talked about someone, once they realize the gains, they can invest here, but how long do they really have after realizing the gains to invest into an OZ fund? Do they have to find an OZ fund first and then is there a certain time period to do so?
Correct. So the time period is simply 180 days from the event, the capital gains event. So let's say this can cross calendar years. So let's say you had your investment, your sale in December 2021. You do have 180 days from that to invest into an Opportunity Zone Fund. So the clock ticks starting the sale of the capital gains event, 180 days. You have to put the capital into a qualified OZ before that 180-day period.
Yeah, okay, this makes sense. And then is there any minimum hold period? So once I have my investment, my capital gain of about 50,000, is there a minimum number of years or period that I have to hold that money into the investment?
So what the OZ program says is that period, that capital that you put into an OZ fund has to be held for 10 years or more for you to actually take advantage of the tax benefits, which is tax-free growth of your money, especially, right? That is the biggest draw of the OZ fund, and you want to keep that money for 10 years, a minimum period of 10 years. So most OZ funds will be at least 10 years.
Okay, that's good to know. You did talk about having investment into OZ funds for all the capital gain. So there's another alternative to that, a 1031 exchange. Why would you think anyone would want to go for OZ fund and not 1031 exchange?
Okay, so let's start with a couple of differences, right? The biggest difference is very simple. With the 1031 exchange, can only be from a real estate sale, right? Yeah. You cannot do a 1031 exchange on any non-real estate sale. So if you have a capital gains from stocks, cryptos, you sold a piece of art, you sold anything else, literally it can be from any event. You can sell gold, you can sell a piece of art, anything can be invested in an OZ fund, which qualifies as a capital gains event, whereas in a 1031 exchange, it has to be real estate. And also understand that if you do a primary, it has to be actually rental real estate, right? It has to be a real estate sale that is from rental purposes, not a primary residence. So that's one. The second one is that when you do an OZ investment, you don't need a custodian of any sort. Whereas when you do a 1031 exchange, you have to have a custodian in the middle. The 1031 custodian, or intermediary as they're called, they handle all the funds for you between 1031 exchanges. And in that process also, you have to realize that when you do a 1031, I don't know how many people here have done 1031 exchanges, you have to take your entire basis into the property as well as all the profits and move it into the new property. And you also have to take the debt and move it to the new property. So there's a lot more, 1031s are a lot more involved than people realize. Once they do one, they realize, oh my God, this is not easy, right? And this is when opportunity zones really shine, is because all you have to do with opportunity zones, just take the capital gains and move it into the opportunity zone fund. You are free to take that capital, the cost basis. So in your case, let's say $100,000 that you invested into the stock, you can take that and go put it somewhere else, right? So it really frees up your capital when you do an OZ investment versus 1031 exchange. From a timeline standpoint, it's pretty similar. You have 180 days in both cases, but you do have a 45-day identification period for 1031 exchanges. So you have only 45 days to identify 1031 properties, candidate properties for 1031 exchanges. So that places additional burden on people because it really doesn't give them the entire 180 days. Then the other thing is where the disadvantage maybe is that obviously an OZ fund has to put money into an OZ area. It has to be a designated OZ area. Whereas on a 1031 exchange, you can put money anywhere, any real estate deal, right? Anywhere. It doesn't really matter where the location of the property is not relevant. And then the last one is the tax treatment of it, right? So there is no minimum hold for a 1031 exchange. You have to basically roll it from one 1031 to another, otherwise taxes will be due. So let's say I did a 1031 exchange to a new property and I sold that property, then the taxes will be due on that property, and it's tax deferred only as long as you keep rolling it from one 1031 to another. Here, you actually get a tax-free gain in 10 years. You don't have to worry about, oh, I have to 1031 this money again into another property. So it's great for people who are like, hey, I want to have a rental property. I want to sell it. I don't ever want to be a landlord. I have people like that calling me, right? And I'm like, okay, I know what you need to do because you don't want to deal with 1031 exchanges if you don't want to keep dealing with properties. So
makes sense. That's really good to know. So one last question. Are the distributions made from the OZ fund taxable?
So it depends on how it's structured. That's a short answer. So let's say we structure the investors as partners in the investment, which means let's say you're getting a K1 and you're a limited partner. There are ways to basically structure the distribution as non-taxable events. If you are investing in a REIT, and investors have to be careful about that, in an actual REIT that invests into an OZ, then you will have some tax implications on the distributions. So it just depends on how it's structured, and of course, always consult your own CPA for any tax questions.
Yeah, that's really good. So I think that's really good enough on a very high level of what an OZ fund is, why would we want to invest. I think for me, the key takeaways on why I would invest in OZ fund is definitely to defer some of those taxes or even evade if I'm leaving it for all 10 years.
I wouldn't call it evade. I would say it's a legal way to not pay taxes. It's a tax-free wealth, right? Like you're really creating tax-free growth by investing in an OZ fund, and you're also getting the tax deferral treatment on your current capital gains, which is amazing.
Correct. And the best part of it is I don't have to put the entire investment into the OZ fund. I can just take my capital gains out of it and, invest in OZ fund. And there's no limit on how much I can really put. I can have my entire capital gain into one OZ fund or into multiple OZ funds, correct?
Correct. And the advantage of OZ funds can also be that I could take an OZ fund and have multiple properties within the fund, right? There's no reason for us to say, hey, one OZ fund, one property. You could have a bunch of properties in an OZ fund, and then you could distribute and get diversification across multiple properties as well.
So in that aspect, I did get one more thing in my mind. So if we, as sponsors set up an OZ fund for an opportunity for a new development, for example, and let's say in 5 years, we are able to get our returns of what we had in our pro forma, we can always sell that investment, get the capital gains, but retain that in the OZ fund and continue to reinvest that into another one, correct? It's not necessary that we have to hold the entire investment or that specific property. Am I getting that right?
Correct. So as long as the money moves into another OZ investment from a sponsor perspective, let's say as an investor, I don't really care. You're handling my money. You give me money back, distribute. So you build a property, you stabilize the property, you decided, hey, this is a great time for us to sell. You capitalized on that sale. Now you can do some of that as a distribution, but you can roll that, keep the cost basis in the investment, and then use that investment for another OZ property, right? As long as there are some periods within which the capital is to be redeployed, but yes, right. As long as it's redeployed within that period into another OZ, so you could just, you could sell properties, you could do some distributions, and it's a great thing, right? When investors have distributions, they also get to pay their taxes by December 2026, so they might want to see some of their money back.
Awesome. I think this is really good information, Kavitha. We got everything that we needed on a high level, at least for my understanding. If I were to be a novice in OZ fund, I understand which direction to go. But for all our viewers, if you have any other questions, you're welcome to post your questions down there in the comment box. And Kavitha also has some other videos on OZ investments on her YouTube channel, Cherry Street Investments. And Kavitha?
Yeah, it was Cherry Street Investor Education.
Investor Education. And I suppose you also have another one coming up in March. Want to give some details about that?
You can, I don't have the links yet, but if you guys are interested in watching the webinar, you can go to Cherry Street Investments, and there's a drop down and it says webinars. You can sign up for the webinar there, and you will be notified once the webinar is hosted.
Awesome. All right. Thank you, Kavitha. That has been very helpful. And we will meet you all again with the next set of questions. Thank you, Kavitha, for joining us today. And thank you all for watching this session for today.